Hi everybody, Bob Iacino, co-portfolio manager, of course, along with Mike Arnold of the Stock Think Tank. And I am sitting here at my desk and I am nervous about this market. Now, you may sense a theme. Mike and I talk about risk first, second, and third all the time. It's always our number one concern. So when things seem like they're getting really out of sorts, out of whack, out of balance, whatever you want to call it, we get nervous. And now we don't change our behavior because we have a process. And because we have a good, solid process, we are now absolutely killing the S&P year to date. It's only 2 months. It's January and February. But looking at my sheet here, the Stock Think Tank alerts returned 14.7% so far in 2021 compared to the SPY gaining just 1.73%. Now last month, we put up a plus 5.96 number, and the S&P put up a down 1.02% number, again, looking at the SPY. And then February, we're up 8.25% on our alerts, and the S&P up 2.78%. Now that's the kind of thing that makes me nervous, honestly. I'm always honest with you guys. And after a month where we outperform by that much, generally, there is a strong rebound back for the SPY. And because part of the reason that we outperform is we take trades off and take the money and put them in our account, as I've explained multiple times in videos, because that's what we do. When the SPY rebounds off of a sell-off like the one it had in January, it usually just rushes to the rebound and beats us, passes us, before we're able to reload the portfolio. Well, that didn't happen in February. And as much as I'm happy that our members and our accounts are all doing well, makes me nervous. Now, we've got trades on right now. And as I'm looking at the portfolio, we've still got the Sprott Silver Trust special play, which is not going our way at all. It's negative, but it's not negative that much. It's down about $197 in the core portfolio. In the model portfolio for the special plays. And that has a total current risk of 1,800. So it's not down much at all, even though on a price basis, it might look like it is. We just put on CBOE, which is the Chicago Board Options Exchange Global Markets stock. Just put that on in the special plays. Then we've got Canadian Pacific doing well, healthcare services not doing so well, ADP back on the run to the upside, we hope, to that new larger target that we placed the trade. I really like that pattern. And Lockheed Martin, which is still about $2 below. Again, if you're looking at a relative where Lockheed Martin is, initial risk of $1,873 in the core model portfolio, down 124. So it's nothing, relatively speaking. So when you look at the portfolio, we have basically 4 core plays and 2 special plays. And if the entire market shits the bed, we might lose on all of those. That will still leave us substantially ahead of the SPY and not negative for the year because we control risk. Now, the reason this is a shorter update, and I'm going to finish this very soon, is because in the next couple of days, you're going to get the February to March newsletter, the new one. Read it. If you don't read it, just try and take 5 minutes. It's 8 pages long. It's not that hard of a read. There's a lot of charts. You'll see our performance, but you'll see a couple of things that I'm very concerned about. Treasury yields and the yield curve. That's not new. You've heard about it, but do you understand it? It's in there. Also, you'll see our performance, but you'll see an inflation chart that struck me and why the yield curve may not actually be steep enough yet and rates may not be high enough yet for what I think is coming. And that, what's coming? Stimulus. Savings rate is through the roof. And the last time the savings rate was this high, that money got spent. And if that money gets spent into an economy that has 60% fewer service and leisure and travel and entertainment businesses than it did pre-pandemic, that's more money chasing fewer goods. That's the damn definition of inflation. And if inflation comes, yields rise. And if yields rise, the stock market falls. That's how it goes. And the Fed may try to do things, and the federal government may try to do things that I'm not aware of yet. But I don't know what those would be. And then on top of that, part of the reason I like that silver trade so much is because of what I just told you. So remember, we have killed the S&P for the first 2 months of this year. We killed it last year, and we kill it without Tesla, without GameStop and AMC gambling shots, without any of these high-flying momentum stocks. Just solid stocks, good setups, and controlled risk. That's what we do. So I'm watching interest rates, I'm watching inflation, I'm watching what the Fed says in reference to inflation, and it's all in the newsletter. Please read the newsletter this month. And if you have any questions, send them to me. I want to answer them. Cheers, guys, and we'll talk to you next week.